Welcome back to Prometheus Capital. Today is Monday, November 17th. It's currently 8 a.m. and we're starting the week with a mixed but very revealing market structure. I'm going to walk through the major sectors, yields, and volatility based on my live Webull dashboard. This is your quick, clean macro rotation read, the same analysis I use to position my own trades. Index futures mixed and hesitant. Let's first start with the major index futures. NASDAQ 100 slightly red, barely moving. S&P 500 future also marginally negative. Russell 2000 red and weaker than the large caps. So right away, we'd say risk appetite is soft, especially in small caps. Money's not aggressively rotating into growth this morning. Now let's check the sector ETFs. Okay, XLK technology is red. SOXX slightly red. TECL red. SOXL slightly green, but tiny marginal. It's telling me that tech is weak but stabilizing, and leveraged bulls like SOXL aren't getting enough fuel to break out quite yet. Healthcare is flat, means defensive but not panicking behavior. No flight to safety, but no appetite for risk on either. XLD energy is green. USO crude oil green. Energy is one of the few strong bright spots this morning. It's holding trend, likely fueled by oil stability rather than a brought-on risk. XLU utilities green. When utilities are green alongside energy, it often means underlying caution in the market. Investors are not fully embracing growth. They're rotating into yield and stability. XLF financials slightly green. Banks being green means yields are supporting them, and the market still feels the soft landing narrative, but barely. Volatility and yields, the true drivers, VIX up over 1%. The VIX being green means market uncertainty is creeping upward. Not panic, but enough to weaken tech at least. Yields 4.12% US 10, US 2 years, 3.6% green as well. It's the most important part of the entire morning. When yields rise, growth stocks weaken, tech and semis pull back, financials hold steady, energy often strengthens, utilities could get a bid as kind of a weird hedge. Summary, money's flowing into energy, USO, utilities, financials, slightly defensive stances. Money is flowing out today of tech, semiconductors, small caps, anything high beta. It's a mild risk-off open, not a panic rotation by any means, but enough to respect it. If you're trading today, avoid chasing tech breakouts today. Yields are pushing them against growth. Energy setups are the strongest. Defensive plays like utilities and healthcare are stable. High beta SOXL, TECL is not the move unless yields reverse down later. Watch the VIX. If it keeps rising, risk off will deepen. All right, now let's move into top gainers list this morning. I'm looking at all the pre-market runners on my Webull dashboard, and today's list is pretty wild. We got a lot of extreme percent movers, but most of them are not real opportunities. Let me break this down. Immediate rejects, do not touch. First thing I want to make sure, extremely clear, just because something's up 30, 50, or 70% pre-market, it doesn't mean it's a good trade. Most of today's big movers fall into the penny stock pump and dump category. Here are a few ones I'm instantly rejecting. WeShop Holdings, UTime, Autonomix, Genius Group, KAIXIN, MSP, Cypherpunk, Silo Pharmacy, OMS Energy, Vivani, NetClass, Beasley Broadcast, Allbirds. If it's under $1, exploding 30 to 70%, that has a tiny market cap. That's not opportunity, that's a trap. These fade 90% of the time by noon. Mid-tier watch list. Now, these are a few names that aren't scams. They're not instant buys either. These require real volume and ideally a news catalyst. SGML Sigma Lithium. That's up 33%. RPTX Repair Therapeutics up 26%. qubit quantum computing up 15%. These can move monster intraday if volume stays elevated, but if volume dries up, they're going to die. So I'm keeping them on watch, not jumping blindly. There's a high quality outlier, Jazz. Now it's an interesting one. It's up over 21% pre-market, and it's the only name on entire list has any kind of true institutional profile at all. It's a $8.5 billion company, large cap biotech. It has real products, real pipeline, real revenue. If this thing is up 20% pre-market, that means there's a legitimate catalyst behind it. The only issue is that it's a little expensive as far as the price. If you want to trade something a little lower priced, maybe under 25, the best option is Sigma Lithium. It's a real lithium miner. It trades with legitimate volume, and lithium has been beaten down for months, so any catalyst can spark a big rebound. This doesn't guarantee it's going to run all day, but compared to penny stock landmines, SGML is the cleanest setup. So my rankings for the top gainers today: pre-market, number 1 Jazz, SGML number 2, RPTX, QUBT. Jazz the clear favorite. The other ones need to keep or increase in volume. Alright, so we're going to move on. Look at the most important mover on the entire pre-market list today, and that's Jazz Pharmaceuticals, ticker JAZZ. Well, a lot of names this morning are penny stock noise. Jazz is the exact opposite. It's a real company, real data, and a real catalyst that institutional money pays attention to. So let's break down what happened. Jazz Pharmaceutical, they announced that one of their cancer drugs, specifically zanidatamab-HRII, marketed under the name Sahara, met its primary endpoint in a late-stage phase 3 trial for gastroesophageal adenocarcinoma. This means the drug did what it was supposed to do. It achieved the main goal that regulators care about when considering new approval. And just to be clear, phase 3 results are the highest impact catalyst in biotech outside of actual FDA final approval. Meaning this endpoint in phase 3 cancer study is a pretty big deal. Why does this matter for the stock? Because this specific trial is for the first line treatment, meaning the drug could become the initial therapy doctors prescribe when a patient's diagnosed. First line markets are significantly larger, more profitable than second or third line treatments. So the potential addressable market here is huge. And on top of that, JAZZ recently released positive data on another oncology drug, Zepzelca, in extensive stage small cell lung cancer. So you've got two separate oncology catalysts hitting within the same window. This creates what we call a compound catalyst cycle, where momentum stacks and institutional buyers treat the stock as a multi-month growth story rather than a one-day pop. So, it dropped more than 20%, which is extremely rare for a large cap biotech. This shows institutional interest. It's not just you guys, that's not just retail to reach that much. Now here's the key. A phase 3 readout doesn't automatically mean guaranteed approval. Regulators will examine the safety profile, secondary endpoints, and comparative effectiveness. What we can say confidently is the results increase the probability of approval. The trial boosts Jazz's oncology revenue potential. It puts upward pressure on the company's valuation, and it shifts sentiment about JAZZ from steady to growth trajectory. For traders, this means JAZZ may enter a multi-week trending environment, not just a one-day spike. So how do we trade this? You got momentum trend trades. The stock holds its gains into the open and builds a base above the pre-market high. That's a constructive possible play. Institutions often accumulate slowly over days. Swing trade, some traders use call options 4 to 8 weeks to capture continuation without tying up heavy capital. You want to avoid the fades. The biggest mistake is chasing the open without confirming volume or price stability. You don't want to just buy instantly. because the biotech pops normally fade hard if the data isn't as clean as the headlines initially sound. So Jazz Pharmaceuticals is just about the only legitimate high-quality top gainer today with a transformative catalyst. Now that we've covered Jazz, if you look here, you'll see my watch list for the stocks I'm going to be trading today. I have it split up into two groups. Basically, you see the green ones. Those are my potential breakout plays, names I think can make a bigger move if they clear key levels. And I have intraday option names, the rest of them, tickers I use for calls or puts during the day because they have solid volume, decent implied volatility, and tight bid-ask spreads that can make it easier to get in and out. SOFI, Pfizer, RIVN, Lucid, Ford, Snap, and IO. First up, SPNT is my main breakout focus. Watching how trades are on yesterday's high and the pre-market levels. If we get strong volume and it holds above those levels, I like the idea of a breakout continuation move. Plan for me is to look for a clean push above resistance with volume, ideally no big rejection wicks. Then I can consider either a stock position or a swing call, depending on how the options look. Next is GNK. GNK is a more sector type play in shipping. Watch for a break on recent range highs, higher lows forming intraday, volume stepping in near the open. If we see that stacking up, this can turn into a nice trend play. CRMD, Cormetics, third bracket name, CRMD, smaller cap. So being a little bit more careful. I'm watching to seeing it's holding over key moving averages. Does the momentum off the open or is it going to fade? Any news or catalyst or anything on volume? If it holds up, doesn't spike and die, it's on the list for a breakout swing. Now we have the intraday options at slash scalping basket. We have SOFI, Pfizer, RIVN. It's one of my higher beta intraday choices. I use it when I want more range. Strong green trend. I look at calls into pullbacks or red, heavy selling, losing intraday levels. I look at puts. Again, I'm paying attention to volume, IV, and spreads. If spreads are too wide, size smaller or just skip it altogether. Ford's one of the liquid workhouse for intraday trades. Tons of volume. Options usually very tradable. Ford is actually one of the stocks that junior traders, people just starting off in stocks, often start with because it's such tight bid and asks. Snap is a momentum name. When it's in play, it really moves. If it's pushing hard with volume, I'll look at calls on pullbacks. If it gaps up and starts failing hard, that's where puts come in. So that's my watch list for today. Breakout plays SPNT, GNK, CRMD, intraday option plays SOFI, Pfizer, RIVN, LCID, Ford, Snap, and IO. Not married to any of these. Of course, price action is the boss. They respect my levels and give clean setups to trade them. If they're sloppy or volume disappears, I'll move on and protect capital. As always, I'll be managing position size, watching IV and spreads, and I'll take profits when the trade gives them instead of getting greedy. And if you like the style of daily watch list breakdowns, hit like, drop a comment with the ticker you're watching today, and subscribe to follow along with the Prometheus Capital journey. Good luck in the markets today, and I'll see you in the next one.